Today we're going to talk about 5.2, which is on page 496 of our textbook, and we're going to talk about controlling our cash. We're going to talk about audit, debits, memos, debit credits, NSF checks, canceled checks, outstanding checks, and reconciliation statements. So we're getting very close to the end of our course here because now we've done all of our accounting. At the end of the month, we need to make sure that our bank statements coincide with the banks. In the last section, we examined the first 6 control procedures. Now in this unit, we will look at the 2 last ones. The last one is called a periodic audit. And basically, if there are a set of employees that want to defraud the company, they're going to find a way to do it. So what happens is the person that owns the company will do a periodic audit, bring somebody in from the outside to have a look at the banking records, and they will be able to have a look to see if there's anything suspicious going on. And then the last procedure is making sure that the company's records of its money agrees with the bank's records and the company's money. This requires an understanding of the banking connection, or in other words, an understanding of the relationship between a bank and its depositors. What is the relationship between a company or a person who deposits money and the bank? Do banks follow the same accounting rules and the same theory of debits and credits as everyone else? And we'll talk about an example. And we're going to leave out HST just to kind of make things a little bit easier. So Renfrew Printing makes cash sales of $1,500 and deposits the $1,500 in its business account at the Scotia Bank. So in Renfrew's printing books, the transaction is going to look like this. We have a debit to cash and we have a credit to sales. Now the bank's books, they're receiving the cash and it's coming off of the accounts payable from Renfrew Printing. Through this transaction, Scotiabank has more money. Its asset account cash increases. The bank owes this $1,500 to Renfrew Printing, in other words. Renfrew Printing is an account payable on the bank's books. At any time, the depositor can demand the money owing and withdraw cash from the account. The bank records the debt by placing a credit of $1,500 in the liability account. A bank, the types of transactions that they do, the main types of transactions is the first thing's called a bank debit memo. A bank debit memo indicates a decrease in a depositor's account. To give notice of a service charge of $22.50 for cashing checks of Renfrew's printing account, the Scotiabank issues a debit memo, as shown in the T accounts on the next page. The bank deducts the $22.50 by debiting Renfrew Printing's account. Remember, a liability decreases on the debit side. So this is a memo that the bank says, we are taking this money automatically out of your account and we're calling it a service charge for cashing checks. Now, Scotiabank, the $22.50 is a debit to accounts payable, but Renfrew's Printing, they're having to pay the cash, so it's a credit of $22.50, and they put that into the bank service charge expense account. There's also something called a bank credit memo. The bank sometimes automatically puts money into your account, and this is usually because of interest earned. So Scotiabank's books would look like this. It would be a credit of $67.39. And it would be a credit memo that would look like this, saying we are depositing money in because of interest earned, and how are they earning it? On a term deposit. Renfrew's books would look like this because they're receiving cash, and it would go to the interest earned, which is a revenue, and we know that revenue accounts have a normal credit balance. Okay, the last thing that we need to do is we need to do a bank reconciliation. Now, we do this personally for your own accounts, and you also can do it for your business as well. And you should do it for your monthly, your own personal, but sometimes that doesn't happen. Pat and Bruna Hunter are a young couple striving to make ends meet. Because they're making payments on their new home and on furniture, they have little money left over for savings. Several months ago, they received a telephone call from the insurance company and from the company holding their house mortgage. Both companies said that Pat and Bruna had given them an NSF check. Now, an NSF check is a check that's been returned by the bank with the explanation that there was not enough money in the account to cash that check. The hunters were quite upset because according to their records, there was enough money in their bank account to cover the checks. They called the bank and suggested that the bank had made an error, and they were right. Somehow the combined deposit for both their paychecks had ended up in someone else's account. And sometimes we think banks don't make mistakes, but they do, because they're human. And the hunters felt good about discovering this error in their account because they kept a really good record of their bank account balance. Let's look at their account records for the month of July. This will show us the hunters always check the accuracy of the bank's records by observing the reconciliation. The hunters have a joint personal checking account at Scotiabank. They use this account solely to make payments for their personal expenses, such as their mortgage payments, their utilities, and their charge accounts. Every month, the bank sends them a bank statement and returns their canceled checks. Canceled checks are checks that have been cashed by the bank already, and it's showing that those checks have gone through the hunter's account. According to the bank statement, the hunter's balance is $277.76. Enclosed with the bank statement were 3 canceled checks, check number 73, 74, and 75. And the hunters made 1 payment by bank debit card on July 15th. So this is what a bank statement would look like, and every bank's looks a little bit different. So this shows what the action of their personal checking account was between July 1st and July 31st. And the bank says that they have $277.76 in their bank account. The checkbook provided to the hunters by the bank includes check record pages, I'll show you in the next page. These provide the hunters with a record of checks written, the deposits made, and the balance. According to their check record, the hunters had a July balance of $533.48, which was correct. The bank statement was $277.76. So which one is right? Okay, so this is what a canceled check would look like up here. Now this is what they were talking about. This is called a transaction booklet. And you can get those from your bank. And what you should do each month is write down all the things that you're writing checks for or using your debit cards for and all of your deposits. Now, from July 1st to the 31st, this is what the hunters had written down. So here are the steps that you need to do. When you're doing a personal bank reconciliation, you do the following. In their check record, they ticked off each of the canceled checks returned by the bank. Okay, so they went back to here and they checked off, and I'll have to flip back here a little bit for you. They went and they made sure that all of these things were actually recorded into their transaction or their record book. Now, this 1090 is a service charge. You don't know what the service charge is until you get your transaction. So that will not be in their record book, but they'll have to add it in. Okay, so they checked off that they had the deposit. They checked off that they had paid these bills. You'll see that they had some things here that have not. All this means is they have written those checks or made those deposits, but it hasn't cleared through the bank at the time that the bank did their bank statement. Okay, so that's number one. They matched and ticked off the deposits. Okay, we did that as well. They looked for items that appeared on the bank statement but not on their records. The hunters then prepared a reconciliation that brought their records into agreement. So the ones that we've circled haven't gone through the bank yet. And after they prepared the reconciliation statement, they had to record the 1090 service charge. So I think on this page, so this is what a bank reconciliation looks like. You always start with what the bank statement says you have. Then you go and you look to see any of the outstanding deposits that haven't gone through the bank yet. And if you look here, that's that $400 one. And you add that in because the bank doesn't know about it. So you say that you actually have $677.76. However, you know that you circled 3 checks here that haven't gone through yet. So you need to take those off because you know they're coming out of your account eventually. And you total that up for 155.18, and then you have to subtract these two amounts to give you 522.58. Now your book, so this is the bank, what the bank says, this is what you say. Your transaction or record book says that you have 533.48, but you did not know that this service charge has to come off yet. Oh, sorry, okay, so you have that service charge of $10.90 that you need to take off of there yet. So your book says that you have 522.58, which is exactly the same as what the updated balance of the bank also says. Okay, and now you can do exactly the same thing as for your business. I don't know if I'll need to read that, but you follow all of the same steps. You check off everything that has gone through. I maybe shouldn't have circled, I should have left them there for you. Now the only problem is that you don't have a record book, but you have all of your journals that we've been making along the way. Okay, so you see here all the credits, $395, $1,200, $250, $1,800. So you go to here and you check them off, and you notice that there's one here that hasn't gone through yet, and it's usually the ones that are right at the end of the month. Oh, and it looks like this one too hasn't gone through. Okay, now you do the same thing with your checks. You go through those. Okay, and then you make your bank reconciliation. The bank statement says that you have 1976.62, but you have that unrecorded deposit of 2,200. Then you have your outstanding checks for a total of 945.10, and so your current bank balance would be 3,231.52. Now cash balance per your ledger says this. Now if you notice, I don't know if I can get back to, if I can find it. You see this this here, right here, this $95, and it says CM. That's a credit memo that you didn't know was going to be there. So that's an interest earned. So you need to add that together to get 3,346.02. And you'll notice here that there was a couple things here. All this flipping back and forth. What happened is you have the service charge, and an RI means returned item, NSF check. NSF check means that they're returning that to you, saying you didn't actually pay it, you didn't have the money there. And then when you have an NSF check, they charge you huge amounts of service charge. So in this case, it was $64.50. So you didn't know that was going to happen. So you need to take that out of your account on your record sheet as well. And when you do that, you get the same total that the bank says you have. Okay, so everything that went through here is all listed here in steps for you. Again, it's exactly like your personal one, so I'm not going to read through all of those. The important thing is, though, is that you need to make sure you have some journal entries to go to record the changes that you made that you didn't know were happening. So you have to make sure that you have a journal entry for your service charge. So your bank service charge will be debited $64.50 and your cash will be credited $64.50. You also have to record your NSF check. Your cash is going up 50 and accounts receivable is going down 50. That was from a customer who sends enterprises a $50 check to pay his account, but it didn't actually go through. So I think I had told you that it was a check that the company had written, but it actually was a check that they had deposited from a customer. So they need to put that back in their account as well. And And it says here, however, when the check is deposited by Beta Enterprises, it bounces. That is, there's insufficient money in this account to pay for the check. An NSF check is usually a customer's check deposited by the company that cannot be cashed and the bank because there's not sufficient funds in the customer's bank account. Since the bank cannot collect from the writer of the check, it will deduct the amount of the check from Beta Enterprises account. The company will charge this amount plus the bank service charge back to its customer's account as an account receivable and will try to collect the amount later. Okay, so that's what they have to do there. They need to go back and they need to collect this 9250 here as well. So their cash is going down 9250 and their accounts receivable is going up 9250. So what this transaction did here, up here, was just kind of cancel the NSF check out, and then here it's being re-recorded. And you also need to make sure that you record your interest earned. So cash is going up $95 and your interest earned is going up $95 as well. Sometimes you also have to pay on bank loans some interest. So your interest expense would go up 120 and your cash would go down 120. So that's the end of that one. It just takes a little bit of practice to do a bank reconciliation, but the steps are exactly the same. So once you do a couple, you'll be good to go. So in these in this one module, these two sections that we did, we talked about all of these 8 accounting standards for your cash control procedures.